Welcome to the daily insights that matter. The government's flagship electric vehicle promotion scheme, FAME, which stands for Faster Adoption and Manufacturing of Electric Vehicles, has dispersed around 80% of the electric two-wheelers of the target set under the scheme. Let's discuss this. The government had set a target of supporting 1 million electric two-wheelers for the fiscal year 24. In the 11 months of fiscal year 23, around 6,49,000 electric two-wheelers were sold at an average of 59,000 units a month. At the same time, electric two-wheelers made up more than 60% of the overall 1.04 million EVs sold so far. According to the data, around 80% of the vehicles have been sold under the FAME program, and the rest 20% would be fulfilled within the stipulated time. The increased demand and sales come at a time when the government has put a scrutiny on a number of EV firms for misappropriation allegations and not meeting the localization requirements. Additionally, subsidies worth rupees 1,100 crore have been held back by the government. The government is on a spree to support electrification of public and shared transportation. The FAME scheme was introduced with the motive of providing sustainable mobility. But with the recent developments and allegations by the Ministry of Heavy Industries towards EV firms, the government is likely to scrap the current FAME scheme and move to the PLI scheme. Last year, in 2022, the FMCG industry faced some major challenges, including supply chain disruptions and worldwide inflationary pressures, which dented the profit margins along with subdued rural demand, which added to their woes. However, 2023 seems to be a favorable year for the FMCG companies as they have kick-started the year with high hopes and demand is already up in February. Let's discuss this. According to the data from retail intelligence firm Bizom, there was a rise in demand for fast-moving consumer goods across India throughout February 23. With that hope, the number of Kirana stocking up FMCG products reached an 8-month high as they aimed to take the advantage of summer demand across various product categories. Rural sales witnessed a rise in demand by 12.4% in February 23, while urban sales grew by 5.5% when compared to the demand seen in February 2022. It is important to note that the growth seen in February is largely from a value perspective. The growth in volumes need to be looked at before we can actually conclude whether there has been an actual rise in demand. Having said that, the sentiment has been positive since January and the sector has witnessed a sequential growth in demand. Post-Diwali, demand was impacted, but now that has recovered. While a complete revival of demand in rural areas specifically may take some more time, there are signs of growth as Rabi harvesting has begun. As inflation remains in control and range-bound, and with hotter days ahead of us coupled with the upcoming IPL cricket season, we remain hopeful of a surge in consumption for FMCG products going forward. So what does all of these news mean for you? Though the EV sales may fall short of the 1 million unit target for this fiscal year, they have been gaining great momentum. The government has taken different initiatives like the battery swapping policy, tax exemptions on purchase of electric vehicles of two-wheelers and four-wheelers, reduction of road tax, etc. to boost the sales of EVs in India. This will have an indirect positive impact on you. Despite headwinds, the sentiment has been positive since January. However, multiple factors including inflation remain a concern and a key monitorable in the near term. This will have an indirect neutral impact on you. While I say this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.